So I was just gonna do a quick video on the market, just so we can kind of see what's going on. As you can see, this is the QQQ futures, so tech futures. Um, it's showing you all the price movement, like even while the market is closed. So it looked a little bit different from QQQ itself. So what everybody gonna be looking at is this level here for the inverse head and shoulders play, and I will draw it for you real quick. So the inverse head and shoulders would be there. And I mean, I feel like it probably should play out because one thing to consider is April is historically the strongest month of the year for the market, right? So every year that's typically the strongest month. It's like usually always green in general. We've been red all April, like it's crazy. Um, One little weird discovery that I saw. So I made this tweet on April 16th. It was just, I don't know what made me think about it. Well, I guess I was looking at lows, like charting my levels. Then I was like, the end of January, we got a bounce. The only bounces we've gotten this year was at the end of the month, end of January, end of February, and the mid to late March. Then I came across this post on Twitter. I can't even remember who posted it. Fed blackout periods. Remember, the Federal Reserve is the people who they control the monetary policies and stuff. And they are the ones that I've been talking about all year. That's bringing. I've been saying that they was gonna bring pain to the markets because they got to do raise rates, run off the balance sheet. Look at these blackout periods and how they coincide with um, the short to medium term bottom for the markets. It's not a coincidence, man. It's crazy. You blacked out January 15th to 27th. You blacked out March 5th through 17th. February, we just had the war stuff. I'm pretty sure this was like the invasion day. There's this weird thing about by the invasion. But I don't know. I don't know. Maybe people just like to wait till the end of the month now. Maybe that's the thing for this year because you just don't know what's going to happen. So I'm thinking with 10 trading days left, this is going to be really, really interesting to watch. 10 trading days left in April. The market just been taking a complete dump, and we right here at this support level. It just makes the most sense to at least try to bounce. A lot of stocks been getting pulverized. AMD probably coming up in this area, this 84 area. Would probably definitely come in 90-ish. So that's probably just going to open up around 90 tomorrow now that I think about it. Because if the NASDAQ is down 1%, this is probably going to be opening up somewhere around here. Anywho, what I'm looking for tomorrow is honestly going to be a gap down reversal. A lot of people going to be bearish as heck coming into this week, but you can't be with so bearish once the market makes a move like this. I mean, it's been down basically for 2 to 3 weeks straight. So it's like you can't really short that. I mean, of course you can scalp anything, but if you're looking for any momentum, any type of continuation, you don't want to be, you want to take the risk up here. You want to catch that initial reversal. So what I'm looking for is actually, this is how I take my trades. So let's say QQQ futures, breaking weekly. Then I'll give myself a little rocket because it's bearish. Or bullish. Rockets go up. Should. So I'll color my weekly one as white. So we can reclaim that. We might can make a move higher for the time being, at least. I'm not crazy bullish on the markets, but I ain't like, I'm not just going to dog it and just be crazy bearish after. Because I mean, I shorted most of this, so I've I mean, we can't expect so much more downside movement. But on a super long term, oh, and we still an inside month as well. That's the other thing that's giving me hope for a bounce because had this broken, let me put my monthly high rate there, which I color yellow. Monthly levels are yellow and weekly levels are white. Daily, anything smaller time frame than the weekly, or yeah, anything smaller time frame than the daily is going to be, or anything smaller time frame than the weekly is going to be blue. So daily, hourly, 30-minute, it's going to be blue. Had we broke that 15,269 level, the highs of last month, and then we retrace like this, I would be crazy bearish. Like I wouldn't even be thinking we about to get any type of meaningful bounce because that's just not good. And you'll see stocks like PayPal have done that. PayPal broke these highs. Yeah, it broke it by nine pennies. So stuff like that you don't like to see because look at this now. I have no type of faith that this is gonna have any type of meaningful bounce in the longer term. Like this is damage. This is damage. I can't quite call this damage just yet for the Nasdaq. So that's pretty much what I'm at in the markets now. As far as the balance sheet runoff and stuff, we haven't looked at that in a while. Just to remind you guys, this is how they pump money into markets. This is how they pull money out of markets. You see, they pump a lot of money. This is the pandemic. So they've been pumping crazy money into markets. And you see how we're kind of topping out here. That's because they running off their balance sheet. That's not good for markets. If we look at interest rates, see they've been insanely low. The problem now is that they're so low. If something does happen, like a war, and you need to do something to help ease market tensions like lower rates, you can't because you can't go no lower than where we at right now. So they got to raise rates, and that's the problem for markets. So, well, I won't say problem market. It's a problem for high growth, or high growth stuff like art, like I've talked about a million times. It's a problem for stuff like Bitcoin. That's why this stuff has done horribly. It's a problem for technology in general. And unfortunately, like 20-30% of the S&P 500, so SPY, is made up of technology stocks. So that's why it's been tough on the markets this year. What's surprising me is that banks have just chopped. The Russell it's bear flagging on the weekly. But it was the only one that was green, the only index that was green last week. So if this can break above 202, I can see it move back up towards 209. Oh, this should be white. But this made me mad because first of all, this chopped for a whole year. Now it's chopping again, and it's just kind of hard to trade when something's just chopping because you're not getting no real good movement. So that's really the markets in a nutshell. I don't think there's anything at this specific moment that I believe is a great investment to just sit in because you got problems here. You got real serious problems. And I talked about it before. This is the 30-year yield. You see it had a triangular breakout. There you go, your triangle, like these two lines to your triangle. You look at this on the long term, and you're trying to break a little downtrend here. I mean, the most important thing to note is just this outrageously sharp move, aggressive move to the upside. As yields and rates have been crazy low, they're not like that anymore. And this is important to know because this is where your mortgage rates and your car loans and all of that kind of stuff is basically determined. Like this is what's determining the rates for these important loans that people take out. So this is why I love the markets, because you just learn about everything and it does relate back to real life. Like it's not like the market is a direct correlation to the economy, but common sense tells us that if rates are raising like this, people are going to start struggling because who can afford homes right now? Home affordability is insanely high. You're paying ridiculous money for a mortgage, and just because of rates right here. So it's just like knowing this kind of stuff is cool. And a lot of people don't know how to manage their accounts. So even as a long-term investor, I always say it's important to know how to trade because you don't want your money to do this. You don't want to. This is horrible, and I bet there's a lot of people still that probably got in right here. That's still in it, like, oh, it's gonna go up. I keep talking about this. Honestly, I've been giving this the benefit of the doubt, and I've been trying to look for a buy signal, and I've gotten not one yet. And here we are in April, the strongest month, and it is still doing horribly. But man, you just would like to believe that at some point it's gonna bounce. Don't know if it will or won't. What I did know was that this was gonna happen. I literally kept saying that we were coming back to test those pre-pandemic levels. I kept saying it over and over and over. Made a lot of posts on Twitter about it actually. So I'm not just claiming to have just said it. It was pretty, and only I knew that because of this, because of where this had to go, interest rates and the balance sheet. So that's the markets in a nutshell. I don't even. You kind of really got to take this literally day by day. There's nothing. Well, there is something that's screaming by right now, but I did post that in my monthly mentorship, of course, but I won't post it here just because I'll post it afterwards. I'm trying to keep some stuff, be discreet about some stuff, so I can be all like, oh yeah, you should have joined the monthly mentorship. But the link to that is in my Instagram bio at 6fatdaddy9. You can join that. But like I said, tomorrow I'm looking for that gap down reversal. And like I was trying to explain earlier on Instagram, it's not like I sit here and watch the market. I just set alerts at price points that I think are important. And I give myself like a message like this one. I'm telling myself that this week's futures flip green. So that's something that I would want to be aware of because I'm thinking the market gonna bounce because we were right here at this key support level. I gave myself a message here that said QQ futures at lowest left shoulder support level. Either we bounce or we go 100% retracement. So I take that information and process it in my head. I know if we flush this, I'm probably not gonna short it. But if we rip above this, then I want to buy calls. So if we go 100% retracement, I'll be watching here for a bounce, here for a bounce. Just because I'm just not into playing the continuation stuff because you'll get your face ripped off. Stuff will reverse on you. You get your face ripped off. The money is in the reversals. So that's kind of what I've been teaching the Discord. It's okay to chill and relax and do nothing. So hope y'all enjoyed the little market update. Fed update, all that stuff. So I'll catch y'all for the next video.